Good morning. It's Tuesday, September 19th, about 6 a.m. Central Time. Overnight, the precious metals are stronger after yesterday's rally. You got gold up $4, 19.57. Silver up 13 cents, 23.63. Copper down 4 at 3.73, so that's the weaker one. We might look at some opportunities there. Platinum up 7 at 9.45. So we do have the FOMC meeting tomorrow. They've got a 99% chance, this is on the CME's Fed Watch tool, that there will be no hike. Now, if you look farther out, you go to the November meeting, there's a 28% chance of a hike. The concerning thing is crude oil futures up about $1 right now at 92.52. How will that weigh in the market? Will that increase these inflation expectations? Saudi Arabia indicated that they have no reason to change any of the direction as far as adding more production out there, and they're quite comfortable with where prices are at. Obviously, they need to balance their budget at $85, and we're at $92.52, so they're making up lost time here from earlier in the year. Now, a lot of analysts here are making calls that this interest rate hike cycle is over, and what they're looking at is into 2024. If you Google CME Fed Watch tool, you could see there when it comes up, you'll scroll down, it'll tell you at what day, how much time before the next meeting, and then it'll give you boxes to check as far as different dates out there where the interest rate hike expectations are at. So it'll default until the front one, which is the September meeting. You'll see it'll say 99% chance at 5 to 5.25, and then there'll be a 1% chance at the next interest rate hike. If you go out to the November one, it'll show you the 28% chance that they do hike. But what you really want to look at as you go into next year, you go into like 2024, you start clicking around in there, and you'll see it actually looks like a standard deviation curve reversing the interest rate hikes that we're at. That's why we believe that like gold from a long-term perspective should get that tailwind as they start cutting rates. Now, when they conclude the interest rate cutting cycle, you'll see that gold will peak out. So these markets, they just move in cycles. You know, this cycle might be on an angle up or an angle down, but they all move in cycles. So the current trend right now on gold is still bearish. However, I think if you were bearish, you probably should have been out of this market already. You couldn't break through 1900. Market started to come up. You had a few days where it was moving irrationally upwards. Those people that were short, they probably should have either been stopped out, booked profits, or done something. So your trend reversal point, 1969, we're closing in on that. The 200-day moving average is 1980. Your first level resistance, 1965 here today. And then on the downside, your support is going to be 1949. The low was 1951. So, and then on silver, same thing. If you were bearish on silver, you probably should have gotten out of those positions, especially on that capitulation type move where it went down to 2250. People would have been foolish if they would have continued to press the shorts down there. With the market reversing and then building onto that trend, they really should be reloading new short positions at higher levels. So your trend reversal point's 24.37. So silver does still have some overhead work to do in order to get back to a neutral trend. The 200-day moving average is 24.16. Your first level resistance is 23.79 and $24. So it'd be really nice to see if we could break through and hit some of those levels. And then your supports are 23.27 and 23.02. So the outside markets are mixed right now. You got the equities are a little bit firmer, but they've really been kind of weak lately. The S&P, the Russell, the Dow are all bearish trend. The NASDAQ is the only one that's neutral, but it's barely holding on to that right now. It's about 100 points lower where it triggers a bearish trend. And then if you look at, the dollar down 20, 104.65, 10-year Treasury notes, they're unchanged right now at 4.31%. So it's really interesting that gold and silver and things like that are doing really well, given that the dollar's elevated level close to 105, and then also Treasury yields not really breaking down. So there's something else out there. ETF inflows and outflows we're going to have to monitor, because if you do have a lot of money managers changing portfolio dynamics, getting more like inflation heavy, they'll start to add gold and things like that. So you'll see those inflows in the ETFs, and that usually is one of the first signs that we're in a new bull market. If you got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.